Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trade. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither Philstock, Well.com, PSW, nor its affiliates, nor any of the respective officers. Personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered...
You are now muted.
Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involve risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you to the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on a specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone.
All right, fantastic. All right, so how's everything going? Let's see how we're doing. Markets are flattish, kind of. I mean, we're down a little bit, but not too bad. And oil's at 48.26. Gasoline up at 161. Natural gas, 296. Nikkei back where we started yesterday. Dollar back down a little bit. Gold, 12.92. Silver, 17. And coffee struggling at 126.55. All right, fantastic. KCU. Which one is KCU? Is that the old one? That's going down to September. Just look at K. Probably defaults to the better contract. Yeah, 128.90. All right. Now, today, we've been trading. What have we got? Am I down for the day on the down? Oh, that's right. Yeah, because I took that trade. I flipped the down when it went the wrong way. So we're up 1,600 so far on the Russell. And what else have we been playing? Let me see. I lost track. We got oil, $730 on oil, and only a little bit on gasoline because I got out of that too quick. Gasoline, 130. Okay, so that's our baseline. And I also have a coffee trade working. We have, I think I got 2 contracts of coffee. KC, those have got to be down a bit. Huh. Oh, no, it's KCH8. It's way out in the future. There you go. Down $300 already. So I picked those up here. See how bad coffee is expensive, these contracts. That's only 40 cent. A 40-cent dip in coffee is costing $150 a contract. So very, very expensive when you're wrong on coffee. And I don't want to get. I have conviction on this one. I'll take a big loss and keep going. But you know, if it fails 130, I'm going to rethink it and let it see where it slides. But I think we should be able to hold this line and hopefully make some progress. And I would very much hate to miss a big move up in coffee. So I'm back in the Russell with 2 contracts. As you see, since this morning, where do we start this morning? Let's take a look. When I wrote my post, it was like 7-something. And we were at 1430, and I have 3 contracts. So since that time, I have gone in and out. So now I've been in and out of 6 more contracts and sold 7 of those, leaving me with 2. And I picked up $300 more for all that work. So the overnight trade was a lot easier to stick with. But honestly, all I was doing going in and out was I just wanted to position myself back near the top to have 2 contracts I can sit on. That's what I did last night. I was happy with my position, and I could comfortably go to sleep on it. When I came back in here, I was around here, and I just kept going in, out, in, out, in, out, trying to raise my basis, making like a little bit each time. And hopefully we'll have a chance to show you how that works if we can find another good index to trade. So let's take a quick look at that before we get into anything else. All right. So the most important thing about identifying a place to play the futures is you want to have a good backstop. So see how 21.9 on the Dow is a good backstop, right? You can tell. And then what's the next one? Is 850 is going to be a good backstop, and you can see it right there is 850. You want a place where you know, and here and 2450 on the S&P, and on the Nasdaq it's going to be 850 when we fail it for sure, and on the Russell we know 370. We like that line. So when you get your cross below the line, as long as the other indexes are confirming the weakness, then you can start shorting, and all you do is watch all the indexes, and if any of them get over their lines, stop out. That's all. You don't just play the one thing you're playing. Look at all the ones that are lined up with you. You should always know exactly where every index was when you entered your trade. You should write it down if you're not going to remember. You should write down where the Dow, the S&P, and the Nasdaq, and the Russell, whichever one you're playing, write down the other one so you know exactly where you did your entry. And that way you know if they're all moving in the same direction or if you're the only one going in the wrong direction. You know, you need to know that stuff. You also want to pay attention to the dollar. Is it getting stronger or weaker? Oil's going to make stronger oil is going to lift the Dow, which is what happened over here. Oil went up and the Dow went up, and the S&P goes up with it. But then oil started getting weak, so I got confident to short again. All right, and that's where I am now. So at the moment, my last two open Russell shorts are about 1372. All right, it says right up here. Those are my open two shorts. And so I want to have a very tight stop on those because I want to go below 1,500. Once I make 1,500 for the day, I kind of want to keep it. So we'll see how that goes. I don't mean net because obviously net I'm got that 700 there and that 100 and something there. But overall, this one I don't count for my day because it's a long-term trade. So I don't really, I don't look at that as like a day loss. This is more of a long-term trade. These are the ones that I'm playing for the day. So they're all up, and I'm happy about that. I got about more than 2,000, about 2,500 bucks. All right, but let's see if we can make some money for the webinar people. That's more important. Who cares if I make money? All right. So what's going on? Let's see if anybody has a question before I start. Faster. I guess you were talking about that thing. This. Yeah, I like that like ludicrous speed, right? I'm going to have to try that next time. I'm too fast. All right. Yeah. It's funny. It's just like the first AI that's taking over here. It's like all of a sudden, you think how many years it's going to be until you have AIs taking over these jobs. Oh, there was a chart the other day. I wish I knew where that was. Was that Monday's post? Tuesday? Yesterday? Yeah, it was yesterday. Hang on. I love that. So it specifically showed you when you're going to lose your job to a computer. AI. Oh, well, that's going to occur to me. 150 instances of AI. That's not going to help. No, I'm never going to find it. Let's see, let's say trigger chart. I don't know what it is. No, anyway, it was cool. All right. When job taken over AI. What jobs want to secret? New job in the robot. Please buy robot.info. No way. Stock analyst. What are you doing? That doesn't seem to work. Oh well. Images. If I do images, let's see. Oh, is it this? Yeah. Okay. Great. Not great, but wait. Take a look. Beat human in angry group. Master poker. And now this is disturbing to me. I'm a poker player. Master poker enough to win the World Series of Poker. Like now, And it's true, they just have this poker robot that just kicked people's asses in the tournament. This is horrifying. I don't know how I feel about that. I mean, I guess I still play chess, even though I know robots can kick my ass. It's a little upsetting, though, to play a game where you know that you can be beaten by a robot. More importantly, though, you have to realize if you're playing online poker, you're an idiot, because you could be playing, somebody could be putting a robot up against you. Or somebody goes online with a robot, puts the robot up against you, and you can't win. Folding laundry, they can have that task. Transcribe speech, well, see, that's weird, because that's what that guy's doing now. Assemble Lego, okay. So I guess robots will replace our kids. Outperform Atari game testers, that's sad for them. Read text aloud, again, we have that this morning. Write a high school essay. I think we can move that one way up. But this is 2026. It's what, 2017? We're talking 10 years. And they need completely taken over. Drive a truck. I think that's going to be sooner. Generate a pop song. That's interesting. Beat the fastest human in a 5K race. That would be significant. That means the thing can run a couple of miles. Translate new language with Rosetta Stone. I don't get that. That seems like a sponsorship to me. A retail salesperson. Okay, I don't know where you guys live, but I can tell you in New Jersey they could move that one way up. Write a New York Times bestseller. That would be fascinating. Now they're giving us. Now I'm a writer, so basically I'm happy about that. They're giving us. It's about 2050. So we got about 33 years. I'll be quite the old man by the time I get beaten by a robot at that. Perform surgery. They're putting that one way back. Research math. Math's way back. It's interesting. My daughter Jackie has decided she actually cares about these kind of things. She's actually decided that's one of the safe places to apply herself. She's thinking about being a math major and working in programming because she thinks that that's a job that's not likely to get taken over in the near future. And she's right, according to this chart. But anyway, I think that's fascinating. But you got to think of the all human tasks. This is a more important one though. All human tasks, 40 years. This is it. Our kids are the last generation of humans that will have a reason to do a job. And we are very, very ill prepared for this change as a society. So, as a general investing thesis for the next 40 years, I strongly advise you to own robots. It will do you no good at all to not own robots. If you have a job, it will be worthless. You need to own robots. Put all your money into robots that do other people's jobs. Or companies that build them or whatever. It's going to be weird. And this isn't bullshit. This isn't science fiction bullshit. I've read this stuff. This very much lines up with stuff I read in all the popular science and mechanics and Wired and all that. I mean, that's where we are. We are the last human beings who will have to do actual labor, or be necessary. Think about that. We will no longer be necessary to perform all tasks on this planet. There will be nothing that we do that cannot be done by a machine. So we got that to look forward to, right? From yesterday, watch list. Please discuss GE. Yeah, we'll go over the watch list. That's a good idea. Please discuss CSIQ and SunPower. Should we close out all long? What kind of pullback do you see next year in investing next to short pickles? I don't know where to short pickles. The best trade idea for robots. I don't know. I have to go with, at the moment, I'd have to lean towards somebody like IBM, GE. The companies that, you say robots. And if you saw the movie iRobot, if you read the book iRobot, there's an Isaac Asimov series. It's actually also good to read because it kind of gives you a little idea of the future. Also, Do Androids Dream of Electric Sheep, which was made into Blade Runner, the movie. Conceptually, what you have to think of a robot is as an industrial machine, right? So it's like a car. Really, it's a car that does stuff. It's a car butler. It's like this thing pops out and does stuff. Now, they're going to be all kinds of shapes and sizes. Now, Star Wars kind of gets that right. There's no logical reason a robot should look like a human in general, because they should look like whatever makes them perform their task better. But ideally, what's going to happen is there's going to be all these robots that do all these different tasks. Now, the thing is, who do you want to own? You want to own it's like owning an auto company, though. You think about it that way. It's like you want to own the company that makes the robots, and you want to own the companies that lease the robots or buy the robots from those companies to perform all the tasks. So as it goes on, there's no way to jump the gun right now, but you figure that the producers of robots are going to probably be, there'll be billions of robots. So there'll be as many robots as cars. So either the same companies are going to do it. Of course, Samsung, Honda is very big on robots. They build a lot of robots in Japan. They're probably one of the most advanced companies doing it. SoftBank invests a lot of money in robots. The forward-looking companies, and IBM, and of course Intel, who make chips for robots. Cisco, who's going to they have to be networked together and talk to each other. You start poking that way, but when these companies begin to be built, when robots start coming off an assembly line, it's like in the old days of the auto, right? First, you want to own the company that makes the assembly line, which would be like owning Ford in 1900. But then you want to start looking at like what industries are benefiting from these robots, and those industries, as they start replacing all their human workers, are going to make a fortune. I mean, even if a robot secretary costs $50,000, which probably they won't, but even if they do cost $50,000 to have a robot secretary, $100,000 to have a robot secretary, it's only 3 years' salary, $100,000 for what you would pay a human. So as long as they last 10 years, you're going to make your money back. So any company investing in this stuff is going to do very well over the long haul. And of course, in the early stages, there'll be all sorts of disasters, and there'll be problems, and things will happen, and whatever. But in the long run, you want to look to that future and say, this is what's happening. It's not going to be stoppable. It's too efficient, and there's too much money involved for it not to go that way. So we'll just have to pay attention as it goes along. There you go, my CS. Well, good or bad? Oh, good. Okay. All right. I feel all right. So what was I saying? Oh, yeah, we should look at something to trade this. Sorry. So if they are breaking down, who's lagging? And who's – all right, the NASDAQ. Let's do the NASDAQ just for the example. So NQ, get rid of coffee. So NQ is now below the 58.50 line. So you short here. Should have shorted when it crossed. What happened? It didn't fill. 8.8. I want to see. 8.8, 13.7, not looking good. Yeah, you got it. Okay. So now we have one short. So this is an easy stop line. A 58.50 is an easy stop line. So now we have a good place to stop out. If it goes over 58.50, we give up on it. And these guys only spiked down and then came right back up, which is kind of upsetting. But hopefully they're all breaking down, and we're going to see much lower prices. So we'll see what happens here. But the key to getting in is getting in when you're not likely to go too far up higher without it won't blast up on you. Like, see how this blasted down because there was no resistance to the downside, so it blasted down. It hit resistance and finally stopped. So if I was paying attention, I could have made a few $100 on that. But that's the point. You want to make your entry at somebody who's got good resistance below. Now, let's not worry about oil, so let's get the other indexes up. YM. The Dow broke down. We missed it, so that's okay. And then ES, the S&P. And the S&P fell a bit faster than we would have wanted. So 45 on the S&P would have been a good entry. And I said 850 on the Dow, so I did tell you guys that. So 850 on the Dow is a good entry, but since I misspoke to those guys yabbering on, I took the one that was closest to a good line, and that was the the NASDAQ, and 58.50 is my stop. Now, I'm not going to put the stop in. I'm just going to mentally, that's what I want to stop. But it's not just to watch the NASDAQ. I want to watch everybody and make sure that he's below his 45 line and he's below his 850 line and he's below his 70 line. As long as they're all below, I can stick with this. But if he goes back to 70, I'm certainly going to stop out mine. So now we'll see what happens. Now, of course, then I go back to not paying attention. This is what you don't do. You don't give a webinar while you're trading futures because you miss everything. All right. So where were we? Something else was good to answer. CSIQ and SunPower. Okay, what's going on with those guys? I always do that. I never have the chart up. Okay. CSIQ. All right, and SPWR. They don't have any anymore, do they? Okay, so they both fell back to the bottom of their channels. Okay, they've got uptrending channels. Well, he's on the bottom, but they both moved down to the uptrending channel. Now the question is, what is this in the options opportunity? I did not get a chance to make the changes yet from the weekend, so got a lot of little entries to make. So this is where they're chugging along without. All right, CSIQ. So in CSIQ, we have $10 calls. What do we do? Why do we do that? We went naked. When did we do that? Well, what did I say on the weekend? Did we cover it? I'm going to be very mad at myself if I didn't cover it. We were way up here and I didn't cover it? I don't believe that. Let's see. Control F, C, S, I, Q. Time to cash it in. Yeah. Okay, so that shouldn't even be there now. All right, so there you go. That's exactly, this is the right thing to do. What a great example of what you should do and why. Because on whatever day this was, when we did the review last week, on August 17th, so I don't know what day that was. That was like Thursday or something like that. All right. So on August, Thursday. So on Thursday, so this is Wednesday, Tuesday, Monday, Friday, Thursday. So here on Thursday, being failing 17, I said, we backed the right horse. It had a nice run, but it's time to cash it in. I still like them, but up 30% enough for me. See, that's not complicated. So the answer to your question is yes, cash them in. We did cash them in. Control F and CSIQ and Control F, SPWR. Now that one I said well on track. So what's the difference between SunPower and CSIQ? Because SunPower is covered and we have a year to get to 10. So the thing about this is the trade was net zero, right? We have a 4,000 credit, $5,000 credit, 9,500 cost. So it's a net zero trade. We have the short $7 puts, which I'm not worried about. Let's take a look at the SunPower chart again. So I'm not worried about it going back to 7. And where'd it go? And the spread, we have 30 of the $5 spread. So it's $15,000 worth of spread potential. And currently, it's 13 minus 6 minus 10. It's currently like $3,500 to $4,000 out of $15,000. So we have $11,000 more to make on that spread. And it's at 9, and we only need 10 in a year. So unless for some reason I no longer believe SunPower is worth $10, No reason to get out of that trade. CSIQ, on the other hand, went up so high that we felt, okay, this is a good time to cash it in. So that's the difference between the two. So what kind of percent pullback do you see this year and the best index to short that, please? I guess please, not pickle. Let's see. SIQ, watch list. Okay, so we'll get to the watch list after this. All right, so let's talk about the other thing we said. Oh, Hertz. Well, what kind of pullback? I don't expect any kind of big pullback until, see, we got to 50 and it kind of stopped, and we still haven't gotten 70, but the indexes are generally holding up here. So it's not, I'm not super confident in short. So we're right at 50 and didn't go over. Up, now it's over. And if it's over, that means I should cash this out, right? But holding and failing. Good sign. So almost ready to cash it out, but turns into a good sign because it fails. Now, what we're going to talk about? Oh, yeah, the overall pullback. Okay, so here's the thing. When did I talk about this? Was that Friday? Just did a whole thing about this. Look at this Friday. I hope you read my posts. You guys really got to read my posts. All right. Portfolio. Did I talk about the portfolio review? I did. Ooh, that was right. In the portfolio review is where I talked about it. All right. So here's the point I was making. On Friday, I did say, on Friday, let's open that. All right. First of all, realize that not today, but whatever. As of Friday morning, we were up 10% on the Dow, 8.5% on the S&P, 15% on the Nasdaq, and flat on the Russell. The Russell is right at this minute negative for the year. And the point I was making on the point I was making the next day here is I said, look, here's the problem. Same problem we have with our portfolio, right? We started with 600,000, and we're making 40% a year in our portfolio. So year one, we make 240. Year two, we have 600. We have $840,000. The 40% of that is 336. The next year it's 470, and the next year it's 658. Now here we are in year 5. Okay, so starting as of November, we're going to be in year 5, and we're sitting on $2.3 million in our portfolios. And if we make another 40%, that's going to be $900,000. That's almost, that's $1 million. We only started with 600,000. We're making 150% of what we started with in a year if we maintain a 40% clip. And I wouldn't mind it if we were doing it by ourselves, if our system was working and we were cleaning up in a market or whatever, but that's not what's happening. The entire market is performing like this. So if you think about that, if you started out with, in fact, we did. We started out with, this is what happened, in fact. We started out with a $60 trillion market 4 years ago, right? And we added $2.4 trillion, and then we get to $8.4 trillion. And then we get to $84 trillion. Then you go from 84, you add 336, then you add $3.3 trillion, and you get to $117 trillion. Then you go from $117 trillion and add 40%, and it's $4.7 trillion more dollars. The GDP of the planet Earth is only like $70, $80 trillion. You can't add, 5% of the GDP of the planet to the stock market. That's not how it works. And that's what's wrong, okay? The physics is wrong. It's just, you know how to fill your swimming pool, right? Your swimming pool is 1 million gallons, and you have a hose, and you get 1 million gallons and blah, 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 so you can fill the hose, right? That's fine. If you have 4 hoses, you can fill it 4 times faster. If you have 8 hoses, you can fill it 8 times faster. That's not a problem, right? Because your swimming pool holds 1 million gallons, and you can fill it. But if you keep expanding your pool 40% every year, at a certain point, your pool becomes bigger than your town's entire water supply. Then it doesn't matter how many hoses you want to use. You cannot fill your pool. You understand that? That's what the market is. The market is expanding to the point where all the money on the planet can't sustain the market. That's what a bubble is about. It doesn't matter how much you want to buy stocks. It doesn't matter how much you like the stocks. The physics stops you at a certain point. You cannot possibly make something bigger than all the money in the world. I mean, you can on paper, but God forbid anybody actually tries to convert this fantasy game into reality, and they'll find out very, very quickly how ridiculous it is. That's a math people don't do. I tried to explain to people in the housing crisis. It was the same thing. I sold my company. I had a real estate data company. I sold it in 2005 because I thought the market was going to crash any minute. It took almost 2 years for the market to actually crash. I was way ahead. But I got top dollar for my company because everybody was projecting that this thing was going to go up forever. And I was like, no, it won't, because we're running out of money. Now, what happens, though, is at the end, in the last year of the bubble, housing prices go up to crazy, crazy numbers. Now, somebody, in fact, my house, which I bought for $400,000 in 1998. Yes, in 1998, I bought my house for $400,000, and somebody in 2006 offered us $1 million for the house. And I told my wife at the time, take the money. I'm like, this is stupid money. It's absolutely not worth that much. So obviously we didn't take the money because the kids are in school, blah, blah, blah. So we stuck with the house. But of course, 2 years later, house is back to $500,000 tops, $450 maybe. Lost half its value. All right, it doesn't matter if you're living in it. It's not really a big deal. But conceptually, I told my wife exactly what was happening. I said, if we take $1 million now, we can go live in an apartment for 2 years, come back and buy the house back for the same money we paid for it. That was my plan. I wanted to do that. That's what happens. And the reason is because even though somebody, one or two people, some percentage of the people are going to transact and buy your house for the $1 million. There will be some houses sold at these bubble tops, just like there is some stock being bought at these bubble tops. And you can't tell exactly when it's going to stop because the people who are buying it on margin. They're buying it on borrowed money. They're buying it, they're cashing in other bubble stocks to buy more bubble stocks. It's not like there's a lot of money coming into the market, just like I said yesterday. With the S&P, look what's going on. SPY. Okay, here's a down day, 128 million. Here's a down day, 136 million. Here's an up day, 60 million, 60 million, 25 million. Well, that's so far. So there's another low volume data. So the amount of volume on the 2 down days is more than the whole next week of volume. So much more money is going out when there's a down day than is going in when there's an up day. So what's happening is money is being withdrawn from the market. That's pulling out support. It makes it even more of a bubble than it was before. All right? But those small transactions are people who are really stupid. And by the way, I explained this when I was on the NASDAQ, was it last week? Yeah, last week. When I was over at the NASDAQ, we talked about this. And I said, look, you have to understand that when on a low volume day, the dominant position here are the central banks that are just constantly buying equities. Not our central bank. We don't buy our Fed doesn't buy equities, but The Swiss National Bank buys equities. The Norwegian bank buys equities. Japan's bank buys equities. There's a lot of banks buying equities. Those guys are buying equities. Everybody's 401ks and IRAs are buying equities constantly. Whenever somebody gets paid, they buy an equity if they have a 401k or an IRA. All these ETFs buy equities. So even though you think the stock price is crazy, at the end of the day, there's a ton of automatic buys that go in. So the less people that trade, the more the automatic buys overwhelm any kind of selling pressure and take things higher. So that can go on for ages. All right, these things just keep going. So then we get back to the primary question, which was basically best trade for robots. All right, what kind of pullback do you expect for the year? So what kind of pullback do I expect for the year? Not much, because these guys, these Federal Reserves, they're not out of money, the central banks, and they will do whatever it takes. Draghi actually says, whatever it takes. Am I going broke yet? What's going on? So annoying. All right, well, all right. I mean, just not really doing anything. So, I mean, Draghi said whatever it takes. You know our bank's doing whatever it takes. You know Donald Trump is going to push to have the Fed save the market if the market starts going down. So I don't really expect, I think by the time we get to the 200-day moving average here at 2352, which is only down 100 points, which is 5%, they're going to consider that an emergency and step in and start doing something. So unless something catastrophic globally happens, where the panic overwhelms what the central banks are going to be willing to do, I don't think we're going to get that much of a correction. I think 5%, 10% the most is all you're going to see this year. But I also think that the firepower that the central banks will have to expend this time to save the markets will probably exhaust them. And then you're going to get into a situation where the total debt of the economies, the total debt of the central banks, so on and so forth, then the math starts to overwhelm them, and then you're into the situation where no matter how many hoses you want to use, your town water supply of the central banks is not adequate to fill the pools, the stock market. And at that point, you can get a major collapse because it's just simply not there. And once people realize that it's never going to get filled again, they're going to start wanting to cash out. And once people start cashing out in this kind of low volume with this tiny amount of buying activity going on, you can have a total disaster. And it can swamp the central banks real quickly. But I don't think it's going to be this round. I think that this round they're going to save it again, like they always do. Like they always step in and say something or do something. They'll do it again, and we'll continue along again. But then the next failure after that, that's when I'm going to start wanting to short a lot of stuff. Like we don't even have a short list right now. You know, back in was it like 2014, 13? Whenever we had a big crash well, actually, here we had a short list because of Japan. China. China was going to blow up. We knew that was going to happen this summer, and we had a short list of stocks here because we knew that there was going to be a big correction. This one was the same correction, really. It was just the same problem coming home to roost. But then since that time, we haven't had a short list. We have a watch list of buying things on dips, but we don't have a short list of things to short because, frankly, shorting is a suicide mission, and I don't think that's going to really change. So, you know, we're bearish, but we're bearish to protect ourselves. In fact, let's see what we're doing today. Now, the 5% portfolio is pretty much where it was on Friday, I imagine. And these aren't accurate because, where is it? $311. Okay, so it was $311, and now it's like $30, whatever it is. $302. So we're theoretically down 9, but we're not really down 9 because this doesn't reflect any of the changes. But untouched would be down 9,000 for the week so far in the 5% portfolio. The long-term portfolio, and by the way, intra-month moves are completely meaningless. The long-term portfolio is up significantly. Control F, LTP. But this is how you know if you're balanced. It's like, when you're surfing and you say, how do I know when I'm balanced? Well, you didn't fall off your board, right? That's how you know you're balanced. If you're still standing, you're balanced. That's the portfolios too. You have to test them in real market conditions. You can have your broker run one of those algorithms that tells you, what your beta is and all that. But it's not accurate. It's only accurate when you actually see the market in motion. And so in a real life situation, the short-term portfolio here is 493, and the long-term portfolio is 1466. So that's 50, 60. All right, so about 1960. But now we have the long-term portfolio kicked ass this week. It's up 1517. These are untouched from last. This is the exact same positions as last time. So we have 1517 in the long term, and the short term didn't lose that much money. No, see, the short term is doing fine. It's still at 511. So now we're over $2 million. So we gained like $40,000 this week in these two portfolios without touching anything. That's without me making the changes that we proposed. So are we balanced? Yes. Are we bullish? Yeah, we're pretty bullish because basically, no, I'm sorry, we're not bullish. We're kind of neutral, but everything we're doing, we're well balanced and it's working because those actual changes occurred August 18th. Oh, it's actually Friday, so I take that back. So on the 15th we updated the short-term portfolio, and on the 18th we each updated the long-term portfolio. And since then, we've gained money. How much exactly it's hard to say because the adjustments aren't in there and so on and so forth. But conceptually, we're very well balanced. We're happy with where we are. So there's nothing really to worry about. And also, it's kind of like Jenga. When you build a portfolio with all these positions, when you pull one position, you have to be careful about how it's going to affect everything else because you have a certain balance that's working. And so I don't like to make too many changes if I can avoid it. But we are balanced. Things are going well. The short end, and when the options opportunity portfolio is also balanced, that means everything is in harmony. So we're in great shape. So so in other words, for the kind of market that we're expecting, we're exactly where we want to be. But the main thing I want to say is that for the 5% correction we expect coming up, maybe 10% correction, we have the hedges in place there that's not even going to phase us. If there's a bigger correction, we would have to make some adjustments. But right now, we're playing for a mild correction. 20% the most. We don't even have hedges that protect us past 20%. We're just not even expecting them. Most of our hedges are basically looking for like a 10% pullback. And I'm not even sure we're going to get that. And if we don't get it, then fine. Then basically our hedges won't make any money, but our longs make money, and we make a little bit less money than we would have because of the cost of the hedges. But I'd rather protect the money we have at this stage of the bubble because you never know when it's going to actually pop. They always seem like they're going to keep going until they don't. Then all of a sudden it falls apart. Yes, a married man. NASDAQ 5850. Uh-oh. Nope, failed again. All right, good. See, he's coming down a little bit. I just need him to get down there and break it. But you see what I'm talking about? See, none of our stop lines are failing. He's still below 45. He's still below 8. Well, he's way below 850. So now, as it's going down, I'm going to lower my stopping expectations. Now I'm going to use this 830 line, and I'm going to use this line, which is that's 850, so 850 still, 1370 still, and 1245 still. So I'm going to, if you pass a significant break point, you want to be aggressively moving your stops down because that's telling you when to take your profits off the table. Okay? You need a good reason not to take money off the table. I'm up $385. A couple $100 since we've been talking about it. And why would I want to blow that? How long have we been, what time is it? It's 45. So in less than 45 minutes that we've been looking at this thing, we're up $200. So I don't want to blow that. I don't want to lose that money. And that's just 2 contracts. But hopefully we'll get a bigger sell-off. But you don't play that way. It's I'd rather take the 200, have it in my pocket, and be done. So, razor tight stop now, because I really want to make sure we lock in this cash. So if he goes red at all, I'm pretty much out of here on my profitable side. And then he becomes my lagger, and I'll hang on with him. Now he's going red, so I'm going to take these off the table. And see what the next move is. See, 918 should be downward pressure. There you go. See? 2720, still downward pressure. 2 and 13, no, not downward pressure, so I'm done. All right? That's how you look at it. So now here, I've still got my 1. He's my fresh horse. And he's going to stop out if we go back over 50. But now I'm up, I gain another 200 and whatever dollars on this side. And now I switch to this one because he's closer to resistance. He doesn't have a really good upside resistance. He broke it before. So his upside resistance isn't as good. His upside resistance is more interesting. Now we're going to play that one, but I don't like the way. I'm not going to add because I don't like the way he's green. Everything's got to line up. All the stars have to line up to make these trades. You shouldn't be making a futures trade based on a gut feeling or one thing is doing. You should see a bunch of things are showing you that things are going the way you think they're going to go. All right, so as it turns out, the Russell's going a bit lower, but that's just a good signal for this one. I've already got a short. I'm fine. All right, what are we going to do? Yeah, this is, you probably, if you went through something similar. But yeah, it's so funny because to me, it's like, it's an investment. Your house is an investment. So it's like, well, I'm going to leave. I'll get an apartment. I'll get out. I'll go live in another place for a couple of years and be up a couple of $100,000 when I'm done. Why would I not do that? But and the reason you don't do it is because you're married. That's basically what happens. It is a very, very different decision process, unfortunately. What are we going to talk about? Oh, yeah, we're going to talk about the watch list. That's a good thing to look at. So yesterday we wrote up a watch list. That was here in Tempting Tuesday. And we'll look for the word watch. So, when we have a pullback, we want to see what gets cheap. Oh, wait a minute. I don't know if you guys can see a video, but I'll just tell you what happens. Here. This is like some friendly little countertop robot, right? They're like just does nice stuff. They hacked it and programmed it to stab this tomato like a serial killer. And he's like stabbing away at it. And that's the thing about, this is why robots aren't coming anytime soon to take over everything, because the reality is that can happen, that can be done. Somebody can, people can hack a robot to steal, to rob your house while you're gone, and so on and so forth. There's going to be decades before they fix all the little bugs that are going to make it acceptable to have this thing in your house. Frankly, computers now, it's really dangerous, how much of your identity stuff is on your computer and how easy it is for someone to get in there, break in, and take all your stuff and effectively take your identity. The reason it doesn't happen to you is because there are only a small percentage of people in the population are criminals, and the chance of a criminal getting to your particular account is fairly slim. That's the only reason it doesn't happen. It's not because it's hard to do. There's all kinds of stuff going on. Last week I was told that I got a phone scam where they were trying to get me to reveal, they were trying to get me to log into their computer so they could then backdoor mine. And they called and said they were from Windows support and that there was a problem in my system and I had to do it. And if it was my grandmother or something like that, she would have been like, oh dear, I better listen to the man from Microsoft. He wasn't from Microsoft. they have a call center. This is a criminal organization that hires a call center to call millions of people, and when they find a sucker on the line who's willing to let them, quote, debug their system, they get in there, they take all their information, steal their identity, and boom, and that's their next victim, and then they move on. So it's effectively what you call a brute force hack, but they're going in. That's what the problem is. They go in by one of the weakest links in the system, which is a human being who lets them come in. Because, when you go, you ever do technical support where you allow them to take over your desktop and something. That's effectively what these guys are trying to get people to do. But once they have it, they just download all your crap and they run away and charge everything to you. So you got to be real careful with the scams. But aside from the scams, though, there's if people get into your neighborhood and they can get your router and so on information and stuff, it's not that secure. And so that's bad enough with your identity and so on and so forth. But when you're talking about if you have a robot in the house and they start using the camera on the robot to watch you and to check out your house and to look for who has valuable stuff, you could actually send a signal to all the robots that you hack and say, let me know who has the most cash. And they can actually create a little database full of houses saying who has the most cash and where do they keep it. And then they can set up their little robbery schedule, and they'll know when you're out of the house and so on and so forth. It's ugly. So and right now people are letting these robots into their houses that have practically zero security. So you'll start hearing horror stories down the line. So and that's why I don't think it's not the wide acceptance of robots. But in that timeline, it was reflected. And in this timeline, it's reflected that it'll be quite a while, 20 years, before they really get the huge penetration of robotics, 2026, 10 years. Because it's going to be a decade of working out those bugs before they get serious about it. All right, the watch list. I guess let's get to the summary part. These are all the things that are on our watch list. This is from Tuesday's post. And, let's just take a quick look. So Aflac, flying, okay. Most of them were from March or thereabouts. So Aflac was an early one. We did that in April and went flying up. BMY also flying up. Delta went down, went down, up, and now down again. Express Scripts down, or really kind of flat to where we started, 217. No, actually down. So they're down from 217, from 68 to 62. Freeport took off. They were from March, and they took off. Freddie Mac, flat. Gannett, GCI, and they're flattish. GE went down. I love GE as a buy-in right here. Gilead, again, GE is one of the companies that down the road is probably going to be a leader in robotics. They're retooling the company. It's like steering a battleship, and you're in the middle of the turn. Like the battleship says, we're going to turn, and here they are turning, and you're selling it because they're not making any progress. But meanwhile, it's like they made a decision to turn the battleship, and the thing is so huge, it takes them 2 or 3 years to make a change. So it's really, again, if you're a day trader, sure, you don't want to be in it while it's going down, but if you're a long-term investor, this is on sale. Gilead went down before it went up. Actually, it didn't go down from where we were. It went up, then it went down, now it's up again. H&R Block there, whenever they go down, I like to buy them, and look what they did. That's phenomenal. And again, this is the kind of one like CSIQ, though, I would get out. 30's fine. Take it, run. Janus is no longer Janus. They're JGH or something like whatever. They merged, but they've also taken off. LB is what I was talking about this morning. This is my stock of the year for next year, if they stay this low, which they probably won't. But down for very, very stupid reasons. Macy's, kind of flat. PBI is Pitney Bowes, also back to where we like them. We like them here. They went up tremendously. Now they came back down. We like them again. You know, I do like them here. I don't like them here. It's very simple. It's a channel. PSA, the problem with PSA, see, they took off again from 200. I said that yesterday. The problem with PSA is it's such an expensive stock that when you sell the puts, it's a lot of margin and such. But it's a good company, and it's also another one you might want to ride up and down. Qualcomm, I'm so surprised they're so down. Good bargain here. We have that in our portfolio. SCE also making slow progress. Sunoco took off. They're gone. SVU flat from where we like them. You know, we like them down, well, 217. We actually like them at 28, and they're down to 22, so we still like them. Taser, Axon, also like down again back to where we came in, which we like them here. We are always, whenever Taser's cheap, we buy it. That's just a rule of thumb. Target, another one. Whenever they're cheap, we buy them. And from February, we're liking them here. They're actually lower now. But by the way, notice the trade we made, though. In February, I said I want to sell the 55 puts. The 55 puts are way down here. And we sold them for 520, so our net entry is down here. So that's what we expected to happen. It's not that we didn't expect them to go lower. If we didn't expect them to go lower, I wouldn't have sold the 55 puts. But we sold the 55 puts because we thought this is where they were going to bottom out. Then we have the 60, 72, 50 spread, 60 here, 72, 50. But the point is now it's cheap to roll the 60s down to the 50s. And that's what you do. You take advantage. There's no sense in spending that money early, but once you get your pullback, you can spend the money and roll and widen your spread. Verizon, same crap with all the telcos. They're starting to bounce back a little bit. Whole Foods, of course, they're getting bought by Amazon. They're done. We can't use them anymore. And Exxon, we got out of when they failed 80, we gave up, which was good. So now they're 76. I actually 76 is a good adjustment. It's really 5% down from 80. I would really get excited at 72. All right, so the poor performers on the list, GE we like, Limited Brands we like, Victoria's Secret, Macy's we love, PSA, like I said, is good now, SVU I still like, and not Exxon. So the only one that fell off the list really is Exxon. The other ones are definitely ones that we like for playing. So what was your actual question here? I know you had a specific question about the list. GE, okay. So of that GE, let's take a look at GE's numbers. Okay, so GE is currently worth $211 billion at 24. PE ratio says 24. Let's see what the analyst is saying about earnings. We're going to make $1.50 a share. It's not 24. I don't get where they're going on that number. Now let's see the number then. So for $200 billion, if they have a 24 PE, they should be making less than $10 billion. What are they making? No, they're making $10 billion. See, I'm not sure where they're getting this number from. They wrote up. They made $9 billion last year, not last year, in 2015. But they wrote off discontinued operations. So they sold some of that stuff for cash. They added to their cash pile, and they did a big write-off, and that's why they didn't show $9 billion in earnings. Otherwise, they would have though. They're pretty steady. They're pretty steady with the amount of money they make. They're making $8 billion. So 211 divided by 8 is 26. All right, so PE is 26 on the net income. But it's really more like 10. I would give them a 20 PE. I would call it like a 20. The math of these things is very complicated, the way they structure themselves, because these discontinued operations, write-offs, and things like that. But I would call their PE about 20, actually, and I think they're undervalued. And I think that's the problem, though, is this disconnect between people count or don't count the discontinued operations and look at things the wrong way. There's also a huge tax break. They wrote a 7.4. They're not going to pay taxes for another 3 or 4 years. So that's a good thing. In fact, look at their income tax expense. They got half a $1 billion credit on their taxes last year. Gotta love these guys. Balance sheet. I mean, come on, it's freaking GE. They're one of the ones that store a lot of money overseas too. $48 billion in cash, $44 billion in short-term receivable, in short-term investments. Debt. $105 billion in debt. $50 billion other liabilities. You know, but it's a huge industrial company spanning this globe with gigantic projects going on everywhere. It's just a monolithic company, and as the world changes, they change with it, and they always have. And it's very hard to completely break a company like this. You know, so it's got to be you basically, there aren't that many giant multinationals like GE, and when they're down, you just got to buy them. That's, you know, you have to realize they're going to change with the times. They're going to come around. They're going to have certain corporate goals, and the shareholders will push them to that. But right now, they're paying $1 dividend, which is really nice. On $24 is a really nice amount of money. So I definitely like them for the long haul. The trade we have on GE I think we bought the stock because the dividend is so good. In the long-term portfolio, I don't know if we had any opportunity portfolio. Where'd GE go? There they are. So we bought 2,000 shares because we want to start collecting the dividends. And then we sold the 25 calls and 28 puts. So we're right on target. We only want them to be at 25 in 2019. They're at 24.40 now. So I don't have a problem where they are. You know, even though we bought the stock when it was 27, we sold the 25 calls because we expected them to go lower. You know, we sold the 28 puts, so we actually don't expect them to go that much. You know, we don't expect them to go that low. We expect to have the puts, but we can always roll these puts. So we'll see what happens. It's a long-term play. You can't play it to go up and down in weeks or months, as with many of our long-term portfolio plays. We're actually looking for what's going to be good 2 years from now, not what's going to be good now. What's going to be good 2 years from now is what we care about. Yesterday, loaning money 2-4%. 2-4%. That's average, I guess. But yeah, it's crazy. It's all this stuff. I can't believe they can't ban this stuff. All these solicitation calls that come in. GE underfunded pension. Yeah, well, I mean, join the club, but that's what's that? Is that specifically GE or is that in general? 25 plans, yeah. GE. Obligations, assets. So they're underfunded by funding says $27 billion underfunded. I know that sounds like a lot of money, but it's not even $2 billion a year when they have to make it up. It's a ding on their profits, but it's not life and death. And plus they'll probably restructure it and come up with some other stuff, so on and so forth. And by the way, the reason a lot of these pension programs are underfunded, they've got $63 billion. Their obligations are $93 billion, but they're underfunded because the frickin' interest they're getting in the bank is too low. That's what's killing them. You know, it's like if you're only, you know, for how many years now have they only been getting like a couple of percent interest, or 5 or 4% on bonds, whatever they're doing with the money? They're not getting as much interest as they expected to get. That's what's killing them. It's not like GE is really badly underfunding their plans. So a lot of these guys, that's really why this is such a problem, is because they're just not getting enough money. Now, some of these guys have never funded enough. You know, when you see half, like 9 to 20, they just didn't make the effort that they needed to make to fund their plan. But this is just a shortfall. This is not. I mean, it's not good. It's a 30% shortfall, but it's not life and death. It's not going to destroy the company. It's a really dumb reason to sell. It's not like this is the first company that ever was short on their pension obligation. But a lot of that stuff is going to have to come out in the wash at some point. How are we doing? What do we got now? We just have the one NASDAQ short. We got out of these, right? We're flat on the Russell, and it is going up a little bit. I'm not sure I'd want to get back into it, but let's look at all the charts and see where we are. See, now the Dow is at the line where we would like to short it, and they are the highest one. Note the Russell's highest. The Russell is over that line. Everybody else is at their pink line. The Russell's over it. So the Russell's giving a signal of strength up here. The Dow is just getting above its pink line, and we'll see what happens. Let's see, hit 50 again, and that was a spot to short it. There. Okay. So right here, it hit 850 on the nose, and that's the shorting spot for it. We talked about that this morning. And here you're like 447. Here's 50 over here. These are good shorting spots. And of course 50 over here. We just did that one. And here we'd like to do it again at 70. But you have to be aware when you're looking at it that they've already blown over 70. So I don't want to get too enthusiastic until I'm sure 70 is failing. That's what you got to look for. Oil is languishing. Meanwhile, remember we took the money and ran on that this afternoon. So I said 40 or 50 was going to top out. So that's where we are there. Gasoline is tearing it up, though, 162. That was a good one. And the Nikkei is still going down because it doesn't like the weak dollar. See, it's all very explainable. It's something you can always look at it and say, oh, I know what's going on with all these things. So meanwhile, nothing exciting going on. Here's the thing. Do we want to add to the NASDAQ short? That's a question. Do I want to make it two of those? I'd rather short the Russell. I'm still on the whole. Would rather short the Russell. I only need 40 more bucks to get to $2,000 for the day. So that's always a nice round number to finish the day at. And meanwhile, of course, we haven't looked at the news. So that's another factor. The pension plans are 60-40 stocks and bonds, not money in the bank. Plan to get 7%, but overall not meeting their target. Yeah. 60-40 stocks, really? How are they not making money if they have 60% stock? That seems odd. They should be firing the fund managers, for one thing. BRTB is oversold. I don't really pay much attention, so I couldn't tell you. But I mean, they're back at the previous low, which is good on long term. And what do they look like? Let's see. BRT. Oh, they just no. That's 10 days ago. They had their earnings call. So these guys are running at $431 million. They are selling $8 billion. Wow, that's impressive. But making nothing, making $20 million. Although, they're only at $431 million. But that's surprising. I'm surprised they have so much sales and so little profit. So, I mean, my answer there is that I would, when you have a low margin business like that, you don't want to give it a high multiple. Because what does it take to knock them out of profitability? Just any little tiny problem there, and the profits disappear. 1%. That's 1%. No, 1% of their revenues is $80 million. That's 4 times their profit. So 0.25% of revenues, if anything goes wrong with 0.25% of revenues, they don't have any profit. So that's why you would, really a company like that, you shouldn't be paying that kind of multiple for it. And again, I don't know enough about them to say whether they're good or bad or what they do. If you want to talk about it, you should talk about it in the chat room. But honestly, it's like not something I follow. I don't follow any small cap guys. FTR 64, they got 10% in 2016. Yeah, well, I guess 40% bonds. Yeah, that's about right. But 10% should keep them up with what they need. I'm not sure what GE is doing wrong, because GE should be doing better than what they're doing. All right. So let's see. We looked at all that stuff, and we talked about that, and now we want to talk about some of the charts and where we're bouncing to. So using the 5% rule, we made these charts. And we have the S&P chart from Monday, but it's not important. So on the Russell, see 1370 is a 5% line. That's why I like shorting at it. It's still a significant line. Even though it's not a bounce line, it's a 5% line. It's just as significant as a bounce line. So 1370 is where I like to short, but once you get over that, it's 137750, the next serious resistance. And on the NASDAQ, we have 5850 is not really a big line that we're following. Up, following two. We're going up. So I was going to say that. So it's not a good line to short. There's not strong resistance there. There is strong resistance, though, on the Dow at 21,670. But the Dow, everybody's over that now. They're at 8 something. So everybody blew past those supports. Now, where are we on the NASDAQ? All right, so this is not working. Everybody's moving back up, and he's down $135, so I should be getting out. So I'm going to take a quick look at it and see what everybody's actually doing. They're going the wrong way. Take the loss. It didn't work. All right, and like I said, had I been paying attention, I should have gotten out earlier. Should have gotten out way down here. But I wasn't looking. It's 50-50. 850 is where we were supposed to get out of that trade. So, like I said, we haven't looked at the news, so I can't say I'm going to short just because I'm hitting my goal here at 70. I don't know why we're hitting the goal. I don't know what's going on at 215 that's causing this move. So if anybody knows, feel free to shout out. But meanwhile, let's take a look over at Seeking Alpha and see what their news thing says. Okay. Okay. McDonald's cut antibiotic usage. That's interesting. I'm looking for something that matters. PetMed Express. Wow. Being killed. Coal companies call for formal proceedings against CSX. Why? What do they do? Raising refusal to meet the demands for coal. What on earth? CSX harbors an open disregard for the coal industry, and like the railroad has announced its intentions to neglect the entire coal sector. Okay. Wow. So basically, CSX says, I don't see a future in coal, so we're not going to spend money building more railroads to go pick up coal. I think they're allowed to do that. But on the other hand, though, I guess if they kind of have a monopoly and they own all the tracks that connect to the coal country and they refuse to build more tracks, I could see we should have an argument against that also. Report critical CSX changes of course the summer of woe and supply chains of farm commodity manufacturers. Interesting. I wasn't aware that was happening. Oh, here's a good TIVA thing. The market's down today. TIVA's down 2.5%. Can't find the bottom. Companies progressing on the plans for the best assets. Women's health business on the block. Okay, so nothing particularly going on. Just the same normal everyday down thing. Venezuela oil is giving promissory notes. That's not good for these guys. For Schlumberger and Halliburton, they have to start accepting like fake cash from Venezuela because they don't have any real money left. There's no market moving note here. Samsung Galaxy 8. There's nothing here that justifies the move up. Which now, so seeing that there's nothing here that justifies the move up, I'm more inclined to short it. This is just nonsense. I mean, the market just pops for no reason at all. So now we go back to the chart and we see if we're going to run out of gas here. So now I'm inclined to think we will, which is a shame because we've got it up here. Who's closest to who's the closest one to our goal? These guys are below 45. So if I don't get a pop, so what I'm looking at now is if I don't get a pop here, I'll take this one. Oh. I'm hoping somebody moves up. 44, 65. Oh, that was so close I could have taken it. Oh, come on. Now I want 44. I'm not going to get it. Haven't placed it yet. I'm watching. Because I'll take whoever pops higher, the S&P or the Russell. Or the NASDAQ. If the NASDAQ gets back to 55, I don't mind doing that. And so you kind of hope one of them will move up, even if it's a contrary move. So I'm watching and seeing who's going to move up first for me. Or maybe I just had bad timing. Nope, he's going lower. He's going 54, below 54. All right, looks like I'm going to have to take it. And still like the Russell best. Still my favorite. So I'll do two short here, and I'll add, if we go higher, I'll add and average myself back to 70. If we get to 45 here, I don't mind taking S&P also. And now I'm going to be greedy because I have too short, so I don't think it's a really good place to jump in on one of these guys. I've got no reason to start messing around. And unfortunately, this is what it's like when you trade in the futures. It's mostly boring. You're going to watch, you're going to wait. Now I've got my position, so I'm watching everybody else to make sure they keep going down. So I know that the trends are generally down. And as long as that's there, I don't mind keeping this trade open. But if everybody starts punching through their levels, especially him, if he punches over 45, I got a problem. So I'm watching that really closely now. And I'm watching, 50 here is already broken on to the upside. And here I want to make sure they stay under 850, which is pretty far out. So there's plenty of room for these to go up. But the point being, this market move up is coming on no news. So I'm going to short a move like that on no news. In general, I feel bearish about where we are now. And if we get a little pop off no news, I'm going to say, okay, that's a shorting opportunity then. But the point is, you have to have a premise to trade. You can't just trade based on every little squiggly line. You have to be looking for something and confirming that the thing that you thought was going to happen is happening. Now, Jackson Hole is starting soon, so the Fed is going, and Trump's talking. We are committed to a great missile defense system, he says. Good for Lockheed and stuff. Now, you see, he says that, and you can right away, you can look up. You can go LMT and say, how are they doing? LMT. They're languishing. So if you're day trading, I would look at Lockheed. I would look at Raytheon, RTN. Also down. General Dynamics. Ooh, General Dynamics with the 200 line. That's my favorite thing. So if I was going to day trade General Dynamics, I'd look for if there's any pop over 200, I'd want to go long there. That could actually get interesting. So Trump is just saying all kinds of stuff now. Who knows what he's saying exactly? And we want to look at how oil is doing and such also, because we never know what he's speaking about. But oil's still failing 48.50, not strong. We're not getting good indicators there. I go back to active trader, and I say, okay, so what have I got? I've got my 2 Russell shorts. Now I'm over 2,000. I'm at my goal, so I should really quit while I'm ahead. So I've got my 2 Russell shorts. I'm at over my 2,000 mark. In fact, yeah, you know what? Since I got 2, but I didn't get, oh, man, as soon as I'm trying to talk about it, too. I got to make the trade first and then talk about it. Since I got down here, and I want it to be at a higher strike, oh, stop it. I didn't want this to be my entry. I wanted to have a higher entry, right? So since I got down here, if I sell one, the one that's left will move up in strike, and I'll be close to where my goal was for an entry. Ugh. How annoying. Now it goes all the way the wrong way. Damn it. You got to go with these guts. I was saying, boy, I want to lock that in, and I didn't. And, of course, it goes the wrong way. I don't see anything alarming shaping up here, but it's all, every word Trump says causes this thing to move. That's the problem. So we have to just be very careful about what he's saying and what he's doing. So if I want this to go to 70, to 1370, I need a 7-point move up. That means I want it at 7 points below this at 686. Is that right? 686? Yeah, 686. Ideally, if I could buy one back there, then this will move up to 70, and I'll be exactly where I want to be on one contract. But now, see, he's green, and he's green, and he's green, and he's going the wrong way on me. So it's not good. And this is the problem because Trump's saying we need to heal the wounds that divide us. So he's saying he's making nice noises. And the market likes it when he makes nice noises. They don't like it when he's talking about getting all his enemies and such. Where is he? The American Legion. Apple stack at 160. Well, whoever's summarizing what he says doesn't bother. I guess he just keeps repeating the same stuff. They're not really changing the notes. So anyway, that's the thing. You got to look and see why is your thing moving? It's moving because every word Trump says, people are buying and selling based on the last thing he talks about. So unfortunately, that was my big chance to sell. Was right when he must have said something bad. He got a nice turn down, and now we're gonna have to wait and see what happens. Oh, he's clapping. He's clapping for himself. What kind of weird thing is that? Okay, somebody comes to the podium. He shakes his hand, and he goes back to talking. Weird. Must have been honoring somebody for something. Clapping again. You know what's funny about Trump? He's got these 2 giant teleprompters on either side of him. And remember when he talked about Obama having a teleprompter? And they had to that show that he was a bad president because he had to read something off a teleprompter? No mention whatsoever about Trump doing the same exact thing. Well, I mean, you can't memorize every speech you make. So it's not really possible. Oh, that's not true, though. I mean, obviously, in the old days, I guess they used to, but they didn't make so many speeches. In the old days, I'm sure Franklin Roosevelt sat there and memorized all the speeches. He didn't have a teleprompter, a piece of paper. Teddy Roosevelt probably just winged it. And Lincoln, I bet, memorized every single word he said. That is genius. Unfortunately, I'm looking at CNBC stuff, because they're basically just keeping the same exact. Trump, need to heal the wounds that divide us. That's all it says. He's been saying that for like 10 minutes. All right, not too exciting. Meanwhile, though, getting closer, almost to the point where I wanted to add a couple more. Oh. I have faith that Trump will screw something up and spook the markets again. We'll see what happens. All right, back to work. FTR, Jackson Hole, Gunfire. Yeah, no, Jackson Hole. I mean, that's the background noise to what's going on as far as people being bullish. Because again, the central banks are getting together. They're all dovish. They're all going to pat themselves on the back for how great they're doing in saving the world economy, and they're going to make a statement that says, "We are still here to hold your hand. Don't worry about it." You know, that's what's going to happen. So we're going to ride that, and then next week we get a lot of data, and then we'll see what the data looks like. To leave positive, DBA will be in a positive position by 2019. I think DBA because again, global warming. You have droughts right now. We were just talking about this morning about the grapes in Italy. There's rolling bad weather conditions all over the place, and too much frost ruins the crops, too much heat ruins the crops. There's so many different ways crops can get ruined that I imagine it'll spike here and there. That we should get at some point, not necessarily next year, but at some point we should get some problems. Not to mention there's always more people who always need more food. Now, what killed DBA this year is that China started allowing Monsanto to give them pesticides and so on and so forth. So I think DBA should be higher than it is now. I thought it was going to be higher than 20 this year, but it fell. I thought it would at least hold 20. But the big change that we have now is that Monsanto has started giving their bio stuff to China, and it's increasing China's crop yields, which of course puts a huge dent in it gives you a big surplus of food in different parts of the world that usually costs more money. And inflation has been very low. You know, the farmers are paying very low rates of interest. They're able to buy more equipment, do so on and so forth. We're in a cycle of new equipment that it's a little more efficient to the farming. There's a lot of things working against DBA right now. But look, it's not it's a trade I use as an inflation hedge. Not really something where I go, ooh, I think crops should always go up. But if there's inflation, it'll show up here, especially wages and stuff. And I think the wages are going to start biting also, especially in this country. But not a home run, and certainly nothing you can guarantee. But I do think this is low in the channel. I think they'll maintain and come back towards that 50-day moving average back around 20. But am I positive? No. If you say am I positive, no, I'm not. I haven't rolled my 2018 DBA position yet. Well, I mean, you should, because otherwise it's going to waste away. So it depends on what the position is. Oh, wait, what happened here? Ryan, government shutdown is not necessary. Oh, ho, ho. That should spark us up a little bit. It isn't, though. So Trump has surrounded himself with all these veterans, and they're all applauding him. He said nice stuff. Ryan, most people don't want a government shutdown. Okay. Why are we hearing some... oh, well. I see Trump, but they keep quoting Ryan. So he must be saying something. Trump just walked out with a bunch of veterans. No, but I guess the gist of it is I don't think he said enough to save the market. But on the other hand, he didn't say anything to damage the market, so it's not probably. I think I'd be very happy to get out of this thing with a little bit of a profit if I can. I'm not feeling good about my short right now. But he didn't say anything. Trump didn't say anything nuclear, you know. So here now I got to keep a real serious stop if we get to 70. And let's see if I don't like the way anybody looks like. If he gets over 45, I should say forget it too on the S&P. Ryan, I completely agree with Trump on border security. Tomorrow, Paul Ryan will be on CNBC at 1 p.m. That's interesting. Okay. They probably have him on the phone or something like that. So what did Trump say? Does it affect oil? Oh, no, oil's still down there. Gasoline stopped at 162, which is good for the day, though. That's exactly where we thought it would end up. So I'm not seeing any major action here. Nope, boring, nothing happening. So on the whole, we're just down about 0.3% across the board on the indexes. And kind of drifting. All right, so what else is going on, guys? So we looked at these things, we looked at the bounces, we cleared all these guys. 58.50 is still where we're doing that short. And the oil contracts, let's see, get that thing. So what contract is this? Commodity charts, commodity quotes. These charts. Metals, interest. Energy. It's NYMEX oil. A light crude NYMEX. There it is. So looking at the oil contracts, we've got 522 plus 343 is 65, 865, there's a billion, 1.2 billion open barrels in the front 3 months. That's just too many. Okay, so there's going to be a lot of pressure down, and it's going to come hard and fast after the weekend. So we have the holiday weekend that'll hold prices up, but after that there's going to be a lot of selling pressure. So let's see if we can tell you what it is now. Going out, we're going to be at all right, so August. So we are looking at, we have until the 1st. No, wait. Yeah, this is not the holiday weekend. This is the holiday weekend. So basically, say the 23rd? Yeah, it's 23rd. Okay, so this is not the holiday weekend. This is the holiday weekend, right? Do I have that correct? Check that on my phone. Monday the 4th. Yeah, Labor Day. All right. I might go somewhere that weekend. All right. So we have a long time. We have 2 weeks, basically. We have until next week, so we'll talk about it more in depth next week. We expect to be around 50 on oil, somewhere around here. We should be up to 50 by this time next week or the end of next week. So we're going to be basically generally looking for opportunities to go long on oil. Let's put on the hourly chart. So at 40, anytime they fall to 48.50. If they fall, I mean they are 48.50. If they fall to 48, if they fall to 47.50, we like oil long. So we want to keep taking long pokes because in theory, into the holidays they should come back to 50. But after the holidays, disaster. There's no catalyst. You have all of the month of September, nothing exciting goes on after the holiday weekend. You have this incredible contract pressure that we just looked at. We've got so many contracts to roll over, and they're stuck into the next month also. So they're just going to make December as they roll more and more contracts to December, they're going to make it worse and put more and more pressure on December. So you're going to see some really heavy selling pressure coming to bear after the holiday. But into the holiday, we are looking for this band to fill up. So we'll see what happens. All righty. Anybody else have any questions? Anything? Any positive DBA? Haven't rolled that. No questions there. I think we can wrap this thing up then. I think we're in good shape. Let's just take a quick look at the futures. And, I cannot catch a break on this guy. Like I said, though, as long as it's under 70, I'm inclined to stick with it. As long as he's under 42,445, I'll stick with it. But I don't like the look at it. I especially don't like that the NASDAQ here is over this line. So I'm not comfortable with it. I'm leaning towards probably going to take a little, $10 loss since I got back in. But probably just get out and be done with it. All right, I'm still a little bit hopeful because I think now that Trump's done, where's the catalyst to keep us up? So if it's under 70, I kind of want to stick with it, but I got a very itchy trigger finger if it goes back up on this trade. So that's the official one we're going to stick with. And if we stay under 70, our immediate goal is going to be over here at 66. I certainly would take one off the table there. And the next hopeful goal is going to be testing 60 again, which would be very nice from where we are now from 69. That's going to give you $500 a contract. So worth it. That's the point. Because we're talking about taking a $20, $30 loss versus a potential $500 win. That's the point of using these resistance points as your entry. Because your reward is generally just way higher than your risk is going to be. All right, so we will wrap it up there, and hopefully we can make a little bit more money. We're up a few $100 for this webinar, but not as exciting as last week was. And we will try this again next week, all right? Thanks for coming, everybody. Take care.